That's a brilliant question. See, in my opinion, whether you're trading or whether you're investing, psychology is by far the biggest differentiator, and it is also the biggest determinant of success or failure. Right? I mean, there could be two people who identify and buy the same stock at the same time and have completely different results, because one person will get scared and sell, and the other person may be able to hold on through ups and downs for a much larger move, right? So psychology, whether you are able to, psychology including discipline, whether you're able to cut losses, very, very important, right? I have seen people get married to their stocks. They don't want to get rid of them, right? Nobody wants to sell their stock. It's like, if asking to sell a stock is, sometimes I feel like, I'm asking somebody to cut off their hand. But that is how the psychology is. Similarly, if I ask somebody to average up, again, huge price anchoring bias comes in. So I've bought this stock at 100, now it is at 120. How can I buy? Or you've recommended this stock as at 100, today it is at 200. Isn't it expensive? How far can it go? So these kinds of psychological aspects are there. The best way to overcome behavioral biases is use systems. You have to write down those systems and follow them diligently. There will be times when you will not be able to follow it. Write them down as well, that okay, I was not able to follow this particular. So let's take a very simple example to think about this. So let's say you said that I will sell a stock that I have if it falls, say, 20% below its previous high. Okay, simple. Now it has fallen. So let's say the previous high was 100, and you, even if you assume that you bought it at 50, it went to 100, and then it has fallen now to 80. According to your own rule, you should sell it. Now what happens is, your mind will start playing tricks on you. You will think that, okay, let me wait and see. It will have a bounce. It was in 100 of just a few weeks back. It will go back, and then it is 79. And you think that, okay, let it come back to 80 and then I'll sell it. And then it goes back to 80. And you think that, okay, it has now come back to 80. Maybe it is starting its up move again. So you wait. It goes to 81. You feel validated. Then it goes to 78. And then you wait some more. Then it goes to 75. And then 70. And then you think that, oh, shucks, what happened? I didn't sell. Right? And then you just stop looking at that stock anymore. And then when it again comes back to, say, your previous, that price anchoring that you had of 100, you rush in and sell. Right? So this is a very, very typical cycle that happens in an investor or a trader's life. Actually, trading and investing in terms of the psychology is absolutely the same, only the time frames vary. Right? The only way you can get rid of this is by using a strategy. You say that, okay, at 20% I will sell. If you're unable to sell, think about it, reflect, and figure out why you are not able to sell. Then maybe you need to update your strategy. And you say that, okay, I am not able to sell. I am getting these biases. So maybe I will sell half. You have to keep updating these strategies. You have to write them down. And that is the only way to go about it. There is no other way to, get rid of behavioral biases. If you look at even Kahneman and Tversky's book, Thinking Fast and Slow, they've spent their lives researching, human thinking and behavioral biases. And what they've said is, even if you are cognizant of your biases, you know that you are biased, you will still fall in trap. right? The only way of getting out of that is by following rules. So that is the one of the reasons why I started exploring the quant side of things, because I thought that, okay, can I write down the steps that I do in my long-term investing? And then that slowly moved on to exploring what is quant and how do you make formulas, algorithms, how does it work, and all of that. But basically start by writing down your uh, by writing down the few points that you will do, and what all it should cover. First is your universe selection, right? So what are stocks you will look at? That I'm now talking about the entire strategy. Second is how you will choose stocks, and these could be very simple rules. You can say that my universe will be only Nifty 50 stocks, or I will only buy stocks between market cap of 10,000 crores and 20,000 crores, or whatever. I mean, you can define, or you can say that I understand IT companies because I work in an IT company, so I'll buy only stocks from IT companies. Whatever be your strategy, write it down. Okay, so this is my universe. Second is what kind of stocks will I buy? So you say that you say stocks with good management, dividend paying, tax paying, low debt, good ROC, etc., etc. Right? So that is your stock selection. Then it comes to allocation. How much should I allocate in a particular holding? So you can say that, okay, I will start off my position with a 3% of my portfolio allocation. Then I will go to 5%. At maximum, I will let it go to 10%, something like that. But write it down. And the last is when to sell. So again, write down your sell criteria. That, okay, I will sell if if the stock does not perform for two quarters. I mean, in terms of growth, or I will sell if it breaks down 200-day moving average, or I will sell if XYZ happens, or something like that. Or I will sell if the if something happens to the promoter of this company, because I'm taking a bet on the promoter of this company. Whatever is your sell rule, whether it is fundamental, technical, techno funda, write it down, and then continuously revisit it and keep updating that.